Alright guys, this video is gonna be totally different from all the others. This video is actually gonna be about psychology, how I think while I trade, what emotions I'm going through while I trade, because I know everyone is going through emotions and we're not machines. Like we have to be a human in a way, so we can't just be totally unfazed by every trade. I know a lot of people say that and that it's possible and they seem that way when you see their faces, but no one is having fun losing money. Like no one is having fun losing money. Then what separates the bad psychology from a good psychology is that how you deal with those emotions that show up when you enter a trade, right? So let's say, for example, that I lose a trade and I'm sad, and then I let it affect my next trade, then that would be bad mental, right? But on the other hand, if I'm sad, but I'm still clear in my head, and I'm still like, that sucks, but I still have my rules that I have to follow and I'm still gonna follow them, then what's the problem with having that bit of annoyance in you? Like, you need to have skin in the game, you need to feel something to improve, man. If you don't care about losses at all, how are you ever gonna improve? You wouldn't even care about improving, would you? Right guys, so when you take a trade, right, you want every few trades to have that win rate that your strategy is set to have. So let's say you have a strategy, right, and you backtest it and you get an 80% win rate, like really high win rate. Maybe you have 1.5 risk reward or something like that. And let's say you lose 3 trades in a row, and you're like, this can't be right. Out of 5 trades, I shouldn't lose 3 in a row. You lose 4, you lose 5. Now you're starting to doubt yourself. You're starting to doubt your strategy. You're starting to doubt if you're doing it right. The thing is, yes, you are doing it right. But what you fail to remember is that on a trade-to-trade basis, it is completely random if you win, lose, or break even on a trade. It's completely random, guys. So, I'm not saying trading is gambling here, and I'm not saying that you're flipping a coin like your whole career. I'm saying like on a trade-to-trade basis. I'm talking about single trade here. So if I'm taking this one trade here, this is random. If I'm taking one more, that's random. But in a series of trades, guys, in a sample of trades, maybe 100, 200, 300 trades, then you have the edge in your favor. You have the probability in your favor, guys, because you backtested it, right? So you know over a series of trades, that's when you win. And that's why you need to stick with one strategy. You need to stick with risk management. Otherwise, the whole system goes down the drain, right? Because let's say one of the trades that you have, maybe you double up your stop loss because you're like, this time it's gonna work. I'm just gonna loosen my stop loss a bit more. But then you lose so much more risk. And the next time you win, you might not even be in profit because you took that big loss, right? So this is why it's crucial to not change your rules based on a loss you take when trading. You need to accept the fact when you put on a trade, you cannot do anything if it's if it's a losing trade or it's a winning trade. The only thing that you can do about it is how you manage the trade, where you put your stop loss, a big position sizing. Where's your TP? Do you cut your losers? Do you let your winners run? Do you actually do that? I know people saying that, but do you actually do that? This is one of the hardest things ever in trading. It's not technical analysis. Everyone can make money. Technical analysis, backtesting, paper trading. So I know a lot of people, let's come in talk about paper trading here for a minute. So I know a lot of people talk about paper trading like it is this bad thing, right? Like there's no emotion, so why would you even bother? The thing is, paper trading shows you what you could do, right? Without all the flaws. It's a perfect version of you. The perfect version of you when you're paper trading. If you want to see your weaknesses, you go into a paper trading account, you figure out what changed. What am I missing here? Or rather, what is not missing? What am I doing wrong? Why is it working in paper trading but not in real trading? Is it because my stop loss is too big in real trading? Am I moving it but not let my winners run when I trade live? These things happen, guys. It happens to everyone, but you have to stay in the game. You have to just believe that your trading strategy will work in the long run. Your system will work in the long run because you tested it, right? So if you have a losing streak of 8, 9, 10 trades and you lose in a row, I want you to keep going. If you're unsure about the strategy, go into back testing again and back test it even more and then hop back. The reason people don't let the winners run and cut their losers and don't cut their losers is because the human brain is made that way, alright? There's nothing wrong with you, it's just how we are made. We have to rewire our entire brain to trade properly. Now why is that? It's because we don't want to have the pain that is associated with taking a loss, right? We don't want pain, and we want to be right. So a combination of these two in a losing trade is that you're moving your stop loss, you don't want to take the L, you still want to be right, you want the trade to go in your direction, you think it's still gonna go, you can make up excuses, it's still gonna go this way, but it's not. And now you've lost 20% of your account because of your ego, because you don't want to take a loss. And now what happens when you cut a winner too quickly? Why is that? Because it's the exact opposite way of not taking a losing trade. You want to have that dopamine, right? You want to get that win. You want to take it, and then you can tell yourself you were right. You did good, right? But then what happens if you cut it 10 points too early every single trade? That's a lot of profit that you're leaving on the table, guys. Imagine if you just let it run or even add it to your position. What if I took a buy right here, guys? And instead of selling up here, I added to my position another long. Wow, what a difference in profits, right? So this is just a quick video, just explaining like you have to see your trades in samples. You can't see it on a trade-to-trade basis. On a trade-to-trade basis, it is completely random whether you win or lose. Imagine you have a coin, right? You flip it 100 times. You know there's a 50% chance of each, right? Either side, heads or tails. But you don't know in what order heads and tails will present itself over the 100 tries, right? So let's say you have 10 times in a row it lands on head, 20 times then after that it lands on tails, and then 10 times on heads. Like you can't know in which order it will land, but you just know if you have a big enough sample size, the probability that it lands on either side is 50%, right? So why would you care about each single coin flip if you know that over a large sample size you will be winning the trade? You will be winning, you will have a profitable strategy, profitable system, and don't change it up. Backtest it enough to be sure that you know your system will in and out, and then just trade it. Trade what you trade in paper trading. Think about it like samples, guys. That's the best advice I can give you, okay? Now, happy trading, happy Christmas, a happy new year to all of you guys.